All right, I think we'll go ahead, we'll get started here. So today we'll talk about flood insurance. And flood insurance is it's a more advanced topic we consider when it comes to floodplain administration, especially. A lot of you are more interested in the permitting side and enforcement side and the floodplain maps themselves because they deal with the regulations. Flood insurance is a separate leg under the National Flood Insurance Program. And it's not a side that floodplain administrators tend to be very familiar with because it's not something you work with on a daily basis. Flood insurance is between the property owner and their lender, typically. So it's not something you hear about all the time, but I'm sure you get questions about it. I know we do all the time in our office. It's our job to answer those questions. And so we just wanted to have a quick discussion about flood insurance. We'll go over some of the common misconceptions behind how it works, the facts behind it, and then we'll share some resources to you so you can find out more on your own. So flood insurance, we'll talk about the myths, facts, and we'll provide some resources to you. We have a different format today. We have, I'm asking for audience participation. So we have pitched an interactive format as part of this training. You'll have there's the two poll questions, but those are going to be somewhat unrelated. But what we'll do is I'm going to throw up a statement about flood insurance on the screen. And I want you to use the chat or give me a thumbs up, thumbs down using those emojis on whether or not you think it's a myth or a fact. And then once everybody's answered or given their opinion on it, I'll show the actual answer. I'll explain whether or not it's a myth or a fact. And you'll get to see the actual response that you would be able to provide to a property owner if they had the same question. Um, you don't have to participate, but it makes it more fun. But this will be a more interactive class. So just use the chat or the emojis, thumbs up, thumbs down, on whether or not you think the statement is a myth or a fact. And that'll be the format for today. We'll cover some different topics with these statements. There's going to be three main topics. You'll have the costs of flood insurance, insurance accessibility, and then insurance coverage. So we'll cover flood insurance from those three different aspects. We'll have statements surrounding those topics. And then, of course, at the end, I'll share some resources and then we can answer any questions. Now, before we start doing this interactive format, I figured we should start by just talking about the National Flood Insurance Program itself and introduce it, how it works for those of you that aren't familiar, just so everybody's starting off on the same page. So the National Flood Insurance Program. This was established back in 1968 through the National Flood Insurance Act. The purpose of it was to take a lot of the burden of flood insurance, of flood claims, flood damage claims from the private insurers or private lenders. Prior to 1968, you had flood damages just tied into your homeowner's insurance policies. And the problem was when you had a flood event that impacted thousands of properties in a jurisdiction, that homeowner's insurance company was then paying out to thousands of people. And a lot of companies were bankrupted, they couldn't pay out, or if they did pay out, they said they would never they would never cover flood damages again. So the federal government was sort of forced to step in, and they created this federal program that enables property owners in communities that participate to purchase federally backed insurance as that protection against flood losses. And the key term there being federally backed, so guaranteed payouts. Now, participation is based on an agreement between the local jurisdiction and the federal government. So there has to be some form of agreement in place between the two of them. And the way it works in the NFIP is the community would adopt floodplain development regulations. You have to have standards for anybody building in the floodplain showing that you are reducing flood risk in your community. And only then will the federal government make flood insurance available in your jurisdiction. And those floodplain management regulations are done through your floodplain ordinance. So for any of you that are in a participating community, somewhere you have a floodplain ordinance that talks about how to develop in a floodplain if that's happening. The key thing here is that participation is voluntary. So not every community in Nebraska is a part of the National Flood Insurance Program, but most of you are. So some of the reasons a community would participate is that flood insurance is mandatory in order for somebody to obtain a federally backed mortgage. So if somebody's purchasing a home that is in the floodplain, flood insurance becomes mandatory. Now, if they are in a jurisdiction that does not participate in the National Flood Insurance Program, they would be forced to purchase flood insurance through a private company. And private flood insurance is just not very available. If you're purchasing a private insurance policy, there might be somebody out there that is willing to provide that coverage, but you might get that only policy in the entire jurisdiction. They have to spread their assets. They don't want to cover 24 properties in the same community because if that community floods, they would be paying out to all of those properties. So private insurance can be both more expensive and harder to find. So it makes things difficult for a community when they don't participate to get more people into town, especially if they have a lot of floodplain, because those people that are trying to purchase those homes are not able to obtain that federally backed flood insurance. There are implications for disaster assistance if they have an identified floodplain, but the community has chosen not to participate. If there are flood damages within that floodplain, disaster assistance cannot be provided to that community for those damages. And of course, by adopting a floodplain ordinance, your community is helping to reduce the loss of life and property due to flooding. The point of your ordinance is to hold those developments to higher standards to reduce the risk of damages. Now, the National Flood Insurance Program was introduced to a new pricing methodology for flood insurance premiums back in 2021. That's when this started. Now, the previous methodology for rating a flood insurance policy was from the origin of the National Flood Insurance Program back in the 60s and early 70s. That methodology was 50 years old. And really, it was only concerned on two main things: the flood zone that you were in and the elevations of the floodplain and of the structure itself. And that was it. Those were the three variables. It led to inequitable flood insurance premiums. And I'll talk about that a little bit more as we move through this presentation. So this is called Risk Rating 2.0, or the new pricing methodology. This began rolling out in October of 2021 and was fully in effect on April 1st of 2022. So any new policies post April 1st, 2022 are using the new methodology. Policies that existed prior to October 2021 they would have shifted to the new rating methodology. If their rate increased under the new methodology, then they would be capped at an 18% increase per year until they reach their full risk rate. If it went down, if their rate went down, it automatically went to the lower rate immediately. And Michelle has put a link to the flyer talking about the new rating methodology in the chat. Now, what changed is that there are now more than 30 different variables that can feed into a flood insurance policy. The new rating methodology uses frequency of flooding, the type of flooding, whether it's river overflow, storm surge, heavy rainfall, proximity to flood sources, building characteristics. The idea is to create a more property-specific approach to rating a flood insurance policy. So every property is getting an individualized rate to address their unique flood risk. All right, let's jump in. So moving forward, this is going to be an interactive format. So I'm going to put up some statements on the screen, and I want you to tell me if you think that is a myth or a fact. So we'll talk about the costs of flood insurance. So our first one is flood insurance is more expensive than your average homeowner's insurance policy. Is that true or false? Myth or fact? Seeing some myths, couple facts, myths. Seems like the majority. So we've got depends. Yeah, that's very true. Okay. I should I cut off that depends now? Is that just gonna, you could answer that for every question, I'm sure. Thanks, James. I appreciate that. Um, yeah, it does. I suppose it does depend, but on average, this is a myth. So, in truth, the average flood insurance premium in Nebraska, which would be your annual payment, is about $868 per year, and this was updated earlier this month. I logged in to find this average. Now, that's around that's about $72 a month. The average homeowner's insurance policy in Nebraska, I'm sure some of you have probably seen this in the news. Nebraska is higher up there in terms of homeowners insurance costs. The average homeowner's insurance policy in Nebraska is around $5,500 annually for about a $300,000 home. Um, that's around 23. Nationally, it's about $2,300. So we're definitely higher up there, but still, the cost of flood insurance is significantly lower than your average homeowner's insurance policy. If everybody was paying their full risk rate, so if we jumped to, if we jumped down the road where everybody has moved up their glide path and is now paying their full insurance costs, the number goes up to $1,100 a year. But most of the policyholders in Nebraska are not paying that full risk rating due to newly mapped discounts or flood events, or their policy is on that glide path. So yeah. Oh, really? That's pretty good. Yeah, I'm impressed by that number, $700 per year. And that they're talking about moving to a monthly payment system. I think some insurance companies allow you to escrow it as part of a mortgage payment or loan payment. Um, but that's not necessarily guaranteed. But they are talking, the NFIP is talking about moving to a monthly payment system, which would make it even more affordable as well. But $700 is very good. Excellent. Okay. Now, again, this was just the average. So obviously you'll have variation from that. Okay, next one. Policies through a private insurance provider outside of the National Flood Insurance Program are cheaper. Seeing a lot of myths. Thanks, James. It does depend, but the, it's false. This would be a myth. So while some private insurance might be cheaper annually, the coverage that they offer might be less. So the key thing here is that with private insurance, you might have more options. They might be able to move up on your deductible higher than the NFIP can go, or they can offer different coverage amounts. Um, but what they're covering might differ from the NFIP. But on average, private insurance is not inherently more cheaper than a policy through the NFIP. Now, before we jump into the next myth or fact, I'll talk about this a little bit more. I want to compare private versus NFIP insurance. Now, the benefit to having an NFIP policy is not just about having the guaranteed payout. You also have you're also eligible for increased cost of compliance coverage. And that's an automatic rider, RIDER. It's an automatic rider with any NFIP policy, so that if a home that is currently not meeting local floodplain ordinances is substantially damaged by a flood, as part of your claim, you can ask for increased cost of compliance coverage to help bring that structure into compliance. It's an additional $30,000 on top of whatever your claim is to help bring it into compliance. That is not coverage that is provided by a private insurance company. Homes covered by private insurance are also not eligible for flood mitigation assistance grant funds. So last year we were granted $10 million through flood mitigation assistance Swift Current as part of our disaster declarations through June and July. And that funding was only available for properties that had NFIP flood insurance. And again, private insurance companies are not always able to pay out. Now, before I go any further, I want to clarify, I'm not here to just sell NFIP insurance. I would much rather have people be insured in some way for flood damages than not insured at all. So this slide is not here to sell NFIP insurance over private. There are obvious benefits to both. But people should find what works for them, for their budgets, for their finances, because we would much rather have people be covered for flood damages than not covered at all. So I put this slide up here not to discourage the purchasing of private insurance over NFIP insurance. Obviously, there are benefits to NFIP insurance, but we would much rather have people be covered. All right, next one. Flood insurance premiums cannot be refunded for any reason. And we have a question. Can you add some type of flood insurance to your homeowner insurance? I mean, it would be a separate policy. The homeowner's insurance won't cover flood damages. I'm sure there are probably some small things that could be claimed, but if they can prove that it's from flood damage, they won't cover it as part of your homeowner's insurance policy. I recommend talking to your lender. I'm sure it can differ lender by lender on what they cover, but typically you can probably buy flood insurance through the same lender, through the same insurance company, but it would be a separate policy than your homeowner's insurance. All right. So seeing a lot of myths, a lot of facts, we're back and forth on this. So this is actually a myth. You can get refunds on your premiums for a few different reasons, and I'll talk about those for a moment. So if no claims are open, there are a few instances where policyholders can get a full or prorated refund on any premiums paid. What might these include? So the first one is if a home purchase falls through. So what I talked about earlier is that if you're obtaining a mortgage in the floodplain, you'll be required to purchase flood insurance, which means a lot of times purchasing a home is conditional upon you purchasing a flood insurance policy. Now, if that home purchase then falls through for whatever reason, inspections or disagreements on negotiations, if that purchase falls through, you can then get a refund on that premium that you paid for, and that would be a full refund. If the purchase goes through, you've now purchased a home and you've purchased your flood insurance. If you then get a letter of map change, so a letter of map amendment or a letter of map revision based on fill that then removes your property from the floodplain, if you do that, you can get a full refund on the premium that you paid for the year. You just have to submit that paperwork to your lender. If you move from a high risk area to a low risk area, so if you received new floodplain maps and your home was taken out of the floodplain, you can get a prorated refund on premiums that you've paid for the year. And then if the lender approves, if you change from an NFIP insurance policy to a private insurance policy, you can get a prorated refund on your insurance premium. Now, I will say it comes down to your lenders or your insurance companies. They might have different policies on refunds, but under the NFIP, these are their standards. Oh, you have a homeowner waiting on flood map changes now. Yeah, so you can let them know. And then this is what I tell people a lot. If you are trying to purchase a home and that home purchase is dependent on you getting flood insurance, it's not always a best practice to wait for a survey and submit for a map change, because getting that surveyor to get out there prior to you having to close on the home is not always very feasible. Surveyors are very busy. They tend to schedule really far out. So a lot of times it makes more sense to purchase the policy so that your home purchase can go through, and then you can follow up with that map change afterwards and get refunded. So that's a conversation you might be able to have with that property owner. Now, again, depends on the lender. So I always recommend they talk to their lender first. That's the first conversation. Is this something that can be refunded? And what are the conditions of that? What do you need from me? Okay, next one. And I know we've got a couple of questions. I'll get to those in just a moment. Homeowners can reduce their flood insurance rates after purchasing a policy. True or false? And while you're answering that, I'll answer a question. So you can't just cancel and get a refund. As far as I'm aware, no. So you can't just cancel. Now, there might, again, it kind of depends on the lender that you're working through. They might have cancellation policies that allow you to get a refund, but over whether that is a prorated or full refund would depend. How many people know you can go through the NFIP instead of your agent? That's something that I think a lot of people, they don't know enough about flood insurance. They go to their typical provider and ask if they provide it, and then that's who they'll go through. But yeah, you can purchase an NFIP direct policy, which is a policy that you work directly with the NFIP, or you can purchase a what's called a write your own policy, which is a policy through a provider such as Farmers. Let's see, what are some of the other ones? I'm not remembering off the top of my head some of the more common flood insurance providers in Nebraska. I believe there are about 30 flood insurance providers in Nebraska, and you can find those on FEMA's website. All right, getting to this one. This is true. So yeah, and everybody answered that one pretty much correctly. So thank you for that. This is a true statement. There are a number of ways that you can reduce your rates even after you've purchased the policy, including submitting an elevation certificate. So elevation certificates are, of course, uh, they've changed. There's a new elevation certificate out, and if you submit an elevation certificate, it can reduce your policy. It doesn't always reduce your policy. What they've said is that if the elevation certificate does help your rate, it reduces it, they will take it. If it does not help the rate, they just won't take it. So it only benefits to submit an elevation certificate. And what they found is about 80 to 90% of people that have submitted an elevation certificate have seen a reduced rate. Also, and I'll go to the next slide here so you can see, maybe. There it goes. Um, Mitigating the structure. So filling in your basement or making the lower floor uninhabited or physically raising the structure. Obviously, those are taking actions to reduce your risk. And so you will see improved flood insurance costs. For non-residential properties, if you can flood-proof the structure and provide your flood-proofing certificate to your insurance lender, then you can also get a discount. If you raise your equipment and HVAC to the next highest floor, you can get a percentage discount of 5%. And then installing flood vents in any flood zone, if you have a crawl space or a garage below the base flood elevation, you'll see a percentage discount somewhere between 3% and 27%, kind of depends on the valuation of what's inside that enclosure. Now, I wanted to go back just for a moment because I have a note here. Those obviously were all structural actions that you could take. But something I want to point out is picking a higher deductible is one of the more common ways that people can get a reduction in their insurance rate. You can go, if you go up to the $10,000 maximum, you can reduce your annual premium by up to 40%. So that tends to be the more common way that people reduce their insurance costs. Also, there are some discounts available. One of them, for those of you that are in a community going through a new mapping project, this is one to pay attention to. There is a newly mapped discount. So anybody that has received new maps within the 12 months after receiving those new maps, you can submit for a newly mapped discount with your agent, which is 70% off the first $35,000 of coverage. And then it puts you on a 15% glide path every year going up to your full rate. But your introductory rate will be substantially reduced. So that's something I've been telling anybody that has gone through a mapping project, and there are a number of counties that are coming up here that are entering that final stage of your floodplain mapping. If you have homeowners that are concerned about their flood insurance rates, you can let them know about the new mapped discount. These are some examples of just some actions that you can take. So obviously on the left there showing elevation of the structure, and then on the right is a real world example. They would be paying a much better premium than the homeowner on the right. Now, the key thing is under the new rating methodology, they're not necessarily concerned about the base flood elevation anymore. They're concerned about the first floor height above the ground. So they would be more concerned that the lowest floor of the structure on the left is about probably 6 feet above grade, whereas the home on the right, the first floor, is only about 1 foot above grade. Oh, I should have moved forward instead of backwards. Here's your slide about the higher deductible. Sorry about that. I had the note on the wrong slide. So yes, again, increasing your deductible, or you can pursue that newly mapped discount for anyone that has received new floodplain maps in the last 12 months. So for those of you that are in these new mapping projects, there's two things that people can do right away. They can submit an elevation certificate and ask for the newly mapped discount, and that is two actions they can take to directly reduce their insurance costs right off the bat. Okay, moving forward. Insurance is not inherently more expensive for homes in the floodplain compared to those out of the floodplain. Is that true or false? I think we had a question. Yes, James, excellent point about CRS communities. So if you are in a community that participates in the community rating system, that is an additional discount. So if you're in a CRS community, there's actually 3 discounts you can get, and that's what I've been talking to a lot of Omaha residents about with their new maps. They can apply for the newly mapped discount, they can submit their elevation certificate, and they'll get a CRS discount as well. Now, something to note, and I apologize if this gets too into the weeds, something to note about the CRS discount. is it applies to the full risk rate. So let's say the full risk rate is $1,100 a year, and the CRS discount brings it down to $1,000. But with your newly mapped discount and elevation certificate, it brings your rate down to $900 a year. You're now below the discount that you would be getting for CRS, and so you may not see that CRS discount on your statement. And so some people get confused. They're, why am I not getting a CRS discount? You're just paying less than what your CRS discount would be giving you, if that makes sense. A little bit confusing. If you have questions about that, just let me know. Okay, let's answer this question before I keep going. This is a fact. So, under the new rating methodology, insurance is not inherently more expensive just because you're in the floodplain versus out. Under the legacy methodology, that's how it worked. If you were in the floodplain, you might be paying 3 times more than somebody who was not in the floodplain. And that might be a difference of 20 feet. There's a line between your property and the property next door. And so that person's paying a third of what you're paying because you're in the floodplain and they're not. And that was found to be inequitable, right? And so under the new rating methodology, being in the floodplain does not automatically result in higher rates. Um, and before I move on, I wanted to talk about the preferred risk policy. That was the term that was used prior. If you were not in the floodplain, if you were in a zone X, is what they referred to, you could get a preferred risk policy, and that was the discount that you got. So that preferred risk policy has gone away. Um, Now, it didn't necessarily increase their insurance rate just because they were out of the floodplain, but it also didn't necessarily decrease the person in the floodplain. It just kind of balanced them out. It's a risk rate now, rather than just in or out. Okay, insurance accessibility. So these questions are related to purchasing insurance or where they can find insurance providers. NFIP flood insurance is only sold through certified providers, certified through the NFIP. Seeing some back and forth on this one. A lot of true, a lot of fact, couple false. Yeah, this is a tricky one, but this is a fact. So, in order to sell NFIP insurance, the insurance provider, whether it's an individual or a company, they have to be verified or certified through the NFIP. I don't think we have any agents in here, but if we do, we have resources on our insurance webpage where you can find out how to get trained to become a certified provider. And also we have application forms on our website. If you're looking for a list of current insurance providers, just head to floodsmart.gov and search for Nebraska. You'll get all of the states. You can just click Nebraska, and it will bring up a list of flood insurance providers through the National Flood Insurance Program. Thanks, Michelle. She put that link in the chat. Okay, next, under the NFIP, only homes in the floodplain can have flood insurance. Is that true or false? A lot of myth, a lot of false. Yeah, you're all correct. This is a myth. So if a property, if a structure is in a community that participates in the National Flood Insurance Program, they are eligible to purchase flood insurance under the NFIP. So they don't have to be in the floodplain. Just any structure, and under the insurance definition, a structure is a roofed building with 2 walls. Now, one thing I want to point out about that is that is different from the regulatory definition, which is walled and roofed, implying enclosed. So a structure under the regulatory side is different than a structure under the insurance side. They're two different definitions. But under insurance, a structure is a roofed building with at least two walls. So this image, I put this image in particular here to show that that would be an insurable structure. So I wanted to put some facts up here, just talking about homes that are not, or structures that are not in the floodplain. Just because you're not in the floodplain doesn't mean you don't need flood insurance. We would still highly recommend it. In fact, 40% of the flood insurance claims come from outside of the regulatory floodplain. The flooding that Nebraska experienced back in 2019 matched those statistics. It was between 30 and 40% of the flood insurance claims from 2019 came from outside of the floodplain. And those numbers include structures that were removed by a letter of map change. So again, just because somebody has a letter of map amendment or letter of map revision based on fill does not absolve them from flood risk. The numbers show. Point being, the chances of flooding are never zero. My house is nowhere near a floodplain. And I made sure to do that when we purchased our house last year. I checked. But we had about 8 inches of rain in around 6 hours on one night last year. I believe it was in May. And I had 2 inches of water around my foundation. It really made me consider purchasing flood insurance, even though I'm nowhere near. Next is homeowners without insurance can recover solely on disaster assistance. Is that true or false? Myth or fact? Mostly myths, a couple facts, few falses. Yeah, so this one would be a myth. This one is a myth. So unfortunately, disaster assistance most of the time is not going to be enough. In fact, disaster assistance is only available for qualifying residentially declared disasters. And they have to reach the threshold that allow for individual assistance to be provided. It's rarely enough for a full recovery. In fact, only about 50% of recorded flood events actually end up receiving a presidential declaration. Just some statistics on this. The average disaster assistance payment between 2017 and 2022 was about $3,000. The average payment for losses in 2019 in Nebraska for flood insurance was about $44,000. The national average is $43,000. So we pretty much aligned with that in 2019. So the difference in that funding that people get provided is massive. Again, average assistance payment being $3,000, average flood insurance payment from 2019 in Nebraska was about $44,000. It goes a lot farther. Some other things to think about when you're thinking about the difference between flood insurance and disaster assistance. Flood insurance claims don't require that declaration. You can submit a flood insurance claim if you have a flood that meets the NFIP definition, which means two properties are impacted by inundation, are inundated by floodwater from any source. That's all it takes. And you have a flood and you can submit a claim. The National Flood Insurance Reform Act of 1994 requires individuals who receive disaster assistance for flood disaster losses have to maintain flood insurance coverage for as long as the individuals live in the dwelling. So not having flood insurance and then receiving disaster assistance for flood damages requires you to purchase and maintain flood insurance afterwards. And also, disaster assistance cannot be used for a second home. However, flood insurance coverage is available for second residences. So, just some things to think about when you're looking at the differences between the two sources. Okay, next one. Homeowners can buy flood insurance coverage immediately before a flood if heavy rains are forecasted. Seeing some mixed responses here. Seeing some myths, some facts. Yeah, so we're right on track with this one. This is a myth. So there is a 30-day waiting period after the purchase of a policy before that coverage is made effective. And that's to stop people, a hurricane is forecasted on the coast, and so everybody's now purchasing flood insurance just to cancel it immediately after, right? That's how that's how they avoid it. Yes, they can still purchase it, Valeria, um, but it just won't be effective. It won't the coverage won't be effective until 30 days later. Now there are some exceptions to that. There's no waiting period if somebody is purchasing a home or extending their mortgage. So if the purchase of a home is dependent on having that flood insurance coverage, that there's no waiting period for that. As soon as you purchase the policy, the coverage is effective. If you're purchasing a home or extending your mortgage. Um, Also, for anybody that has been newly mapped into the floodplain, that waiting period is just 1 day. So if they go from a low risk zone to a high risk zone, and they have to purchase insurance, there's only a 1 day waiting period. And that 1 day waiting period is applicable within 13 months after the map update. So there's some exceptions to that, but for the most part, it's a 30-day waiting period before that coverage is effective. All right. Myth or fact, you can purchase a flood insurance policy without submitting an elevation certificate. Yeah, everybody is on the right track with this one. Very good. Yeah, so under the new methodology, this is a fact. You don't have to submit an elevation certificate in order to obtain a flood insurance quote. That used to be the case under the legacy program. You did have to submit an elevation certificate, but that was really hard for people waiting for the survey, waiting for a surveyor to get out there and complete that elevation certificate just so they can get a rate. It can be expensive and time consuming. So they've gone away with that system. You can now go apply and get an answer within minutes. And you don't have to submit an elevation certificate. Now, with that said, because you're not submitting that property specific information, your rate might not be as accurate as it could be, and you might end up paying more for insurance. I think somebody had pointed that out in the chat. So you can still submit an elevation certificate to get an improved rate. Like I said before, 80 to 90% of people that have done that have seen an improved rate. Sections H and I of the new elevation certificate are one of the best ways to do that because you don't have to hire a surveyor to do this. What you do is you measure the first floor height above grade, like in that image there. You just measure using a measuring tape how high that first floor is above grade, and you're only counting the floors that are at or above grade. So if you have a basement, you kind of just ignore the basement and measure above grade to the next highest floor. You can still hire a surveyor to complete sections C and D. That might get you an even more accurate rate, but you don't have to. Anybody can fill out sections H and I just on their own and submit that elevation certificate to potentially reduce their insurance rate. Now, as I said before, if it increases your rate, they won't take it. They'll only take it if it reduces your rate, so it doesn't hurt. It never hurts to do that. If you want to know more about the elevation certificate and how it works for insurance, how to fill this out, we do have a recorded training on our elevation certificate. I recommend you go watch that. It really goes into a lot of detail about how this works. All right, and our last topic is coverage. So NFIP policyholders are never dropped for having too many claims. Is that true or false? Seeing some back and forth on this one. That's okay, James. You don't have to know. That's okay. I appreciate you being honest there. Very good. Yeah, some back and forth on this one. This is good. So this one is actually a fact. And the key thing here is we're talking about NFIP policies. So recurring losses, just because you have recurring losses, you will not be dropped. Now, if the property is determined to be a violation, then they can deem it uninsurable. So that there's a difference there. If the structure itself is a violation, then it can be deemed uninsurable. But just for having recurring losses or multiple losses, you would not be dropped. Now, it will hurt your rates. So having multiple claims will increase your flood insurance rates if the claims happen after 2021. I'm sure some of you might have heard, but there's a lawsuit regarding the new rating system, and part of that lawsuit uh, clarified that any claims made prior to 2021 reset. So your flood history reset starting in 2021 under the new methodology. So any claims prior to 2021 are not taken as part of your rating. So just keep that in mind. But yeah, just having multiple claims, they won't drop you. And a lot of that is due to the fact that you have to maintain insurance on a home to have the mortgage, right? And so they can't just drop you because that would then have implications on your mortgage. So, all right. Flood insurance through the NFIP does not cover basement damage. I hear a lot of misconceptions about this as well. What do we think? True or false? A little bit of back and forth. I think mostly false seems to be the consensus there. Yeah, again, you're right on track. This is a myth. So an NFIP claim can be made for a few things in the basement, such as cleanup. So just cleaning out the basement, getting all that muck out of there. Your cleanup costs can be part of your claim. Foundational elements, so your supports, footings, that kind of thing, foundation walls, slabs, all your foundational elements can be part of your claim as well. Support columns, and then any equipment servicing the structure. And interestingly enough, if you look at that image there on the right, that's a freezer. It does cover the contents of your freezer as well. So mechanical equipment such as furnaces, water heaters, washer dryers, circuit breaker boxes, those kinds of things are covered. Um, Now it's relatively minimal coverage. There's not a lot. So it's not something to lean on, that's for sure. And having a basement uh, would be it's harder to recover, and there's less coverage than you would get elsewhere. Especially when it comes to finished basements, there's not a lot of coverage for those finishings. But at the bare minimum, these are the things that would be covered. So there is some coverage for basements. Okay. Policyholders that experience substantial damage qualify for additional funding to help bring their home into compliance. I think I may have spoiled this one. That's okay. What do we think here? Yeah, yeah, yeah. All right, cheaters. I did already answer this one. Thank you for, I think everybody was paying attention to this one. Yeah, this is a fact. NFIP policies come with increased cost of compliance coverage, up to $30,000 on top of the claim to help mitigate their non-conforming structure. So this is, yes, you are. Thank you, Bonnie. I appreciate that. I came to this question. I was like, oh, whoops, I already spoiled this one. So, but thank you. Thank you all for answering still. I appreciate the interaction. Yes, that coverage is available through an NFIP policy. Now, keep in mind, claims, there are maximums on how much you can submit for a claim. So $250,000 of structural coverage and $100,000 of contents coverage are available for residences. So that $30,000 cannot then exceed those maximums. So if you're already getting the full $250,000 claim, the $30,000 they can't apply that, right? You've already reached your maximum. But if you aren't reaching your maximum, then the $30,000 can be accessed. It's higher for non-residential buildings. $500,000 for the building, $750,000 for the contents. All right. Erosion damages caused by flooding are not covered by an NFIP policy. A few myths, a few facts. We're going, yep, a little bit 50-50, mostly myth. Yeah, very good. Okay, so this is actually a myth. There are some coverages for erosion, if you can prove that it was caused by flooding. So collapse of the ground caused by erosion or undermining is covered under an NFIP policy if you can prove that it came from flooding. And that's the hard part, is providing that proof that it came from flooding. So just that's the hard part. Damages from general landslides or other earth movement would not be. So if you can't prove that it came directly from flood damage, then it won't be covered. And I believe this is the last question. There's no appeals process for policyholders if the insurance company denies all or part of the claim. Perfect. Yeah, a lot of falses. Everybody's on the right track with this one. Perfect. Yep, there is an appeals process. Every policyholder insured through the NFIP has the right to appeal any denial within 60 days after the date of the denial letter. So whether it's a full denial or just partial denial of part of their claim, you can submit an appeal within 60 days after the date of receiving that denial letter, and there's no fee for submitting that appeal. And a lot of times they just need more pictures. I always tell people when you're submitting a claim, take pictures of everything, your thresholds, your trim, your window frames, your sockets or outlets, all of it. Take pictures of everything to support your claim. Oh, and I guess I do have another one, sorry. Coverage can be transferred from a previous homeowner to the next. Is that true or false? Okay, so some back and forth on this one. Some true, some false. Sure. So this one is actually a fact. So the policy assumption process allows a policy to be transferred, and that transfer includes any discounts or lower rates to the new property owner. So if you have a discount or a lower rate for any reason, it would benefit the new property owner for you to transfer your policy to them so they maintain those discounts. If you cancel your policy and then they pick up a fresh policy, they may not get those same discounts. And so in a lot of ways it benefits the new property owner to transfer your existing policy. Okay, and that brings us to our resources. So there is actually a full myths and facts document on FEMA's website that has a lot of these same questions and a ton more. I think it's something like 50 pages. There's also answers to questions about the NFIP. And so if you need more than just insurance questions and answers, there's an NFIP answers to questions as well. So there's myths and facts and answers to questions about the NFIP you get from both perspectives. So I'd really recommend reading through those if you ever get any questions that you aren't immediately able to answer off the top of your head. I use these all the time. And Michelle is putting all of those links in the chat now. Flood Smart, there is a ton of material about flood insurance on floodsmart.gov. It's a very well maintained website. I highly recommend you check that out. And on that website is a new quoting tool. So if you go to that tool, enter in some very basic property information, such as the address and how big the home is, you can get an immediate quote. I think it took me about 5 minutes to get a quote, and it came out with about $400 a year was my annual premium. But yeah, you can just go get a quote, and within about 5 minutes, it'll give you a list of options in terms of coverage amounts, deductibles, and you can pick and choose what works for you. But that's a new tool, so I highly recommend you go check that out. And then there's also a discount tool. So if you want to find out how much somebody could save on their insurance if they elevated the floor height, or if they brought their HVAC systems to the next higher floor, or depending on the foundation type, you can go get an immediate answer onto how much of a discount somebody might obtain if they did all of those things. So if somebody's building a new home and you have the opportunity to talk about how high above grade they should be, you can look at some of the discounts that they would obtain if they did that. Our website also has a ton of insurance information. If you go to our insurance webpage, all of this and more is on there. And I've structured that insurance page to walk through the entire process from insurance resources to choosing coverage and then filing a claim. All of that information is there, including the discount guides, how to file a claim, how to reduce rates. All of that is there on our website. There's some promotional materials for communities as well as for insurance agents. If we have any insurance agents in here, there's a ton of postcards and flyers for you to choose from and print off directly from our website. We have social media accounts. We highly recommend you go follow us there. We're actually going to run an insurance campaign this month with some more resources about flood insurance. So I highly recommend you go follow us at any of these places. They may change. Yeah, they may change. So watch for the new possible uh, social media pages under the new name, DWEE. And then these are this is our contact information for our whole team. So thank you all so much for being here. I know we went a little over time, but I appreciate you all sticking around. We'll stick around if you have any questions. So if there's anything we didn't get to, feel free to stick around and we can answer your questions. Doesn't even have to be insurance related. Otherwise, feel free to hop off. Thank you all so much for being here. We really appreciate it. Yeah, thank you. Thanks, Joe. Thanks, Kevin. Thanks,